Good evening and welcome to the Strategy of the Week tutorial for August 2nd, 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest, and I am pleased to announce the launch of a new competition, this time for VectorVest Canada, and so we call it the VectorVest Canada Challenge. So what I want to know now is who's up for the challenge. You might ask, well, what is the challenge? So let's get into it. The challenge is simple. Make as much money as you can from July 2nd, 2008 until July 31st, 2013. However, you must beat the VectorVest entry to qualify. And so the next natural question is, well, how do I do that? So let's discuss it. We are going to grade the entries by something we termed portfolio efficiency, and we first discussed this topic on December 21st, 2012 in our U.S. Strategy of the Week presentation titled Scoring Portfolio Performance. So let's get into the subject of portfolio efficiency. Here's the formula. We're going to look at the annual win percentage, the winning trade percentage, the drawdown, and the total gain. When we talk in terms of annual win percentage, you might ask, well, what do we mean there? So let's dig into that first. Here we're looking at the performance in totality for the VectorVest entry. However, I'm focusing on the first section here from July 2nd of 2008 to July 2nd of 2009, where we had a total gain of 87.19%, which is remarkable performance. And so at the end of one calendar year, certainly we had a nice gain, and that is going to count in our favor. Essentially, we're going to look at, does the portfolio go up year after year? So let's take a look at the next calendar year. Here we stand as of July 2nd, 2010. So one calendar year from July 2nd, 2009, and we have a total gain now in totality of 116.82%, which is a nice gain over this 1 year period of 29.63%. So we have now won 2 years in a row. And if we look to the next year, we have a nice gain again. As of July 4th, 2011, the total gain now stands at 147.56%, which was a gain of another 30% for this year, 30.74%. Well, let's see what happens to us the next year. And here we hit a little bit of a slide. We fell back. As of July 4th, 2012, we now stand at 141.83%, which was a loss of 5.73. Not terrible. You can see that during this year we were up a good little bit and pulled back dramatically on us towards the end. But what we can see is the next year is going to really take off for us again. And so here, as we stand on July 5th, 2013 at the end of the green arrow, we have a total gain of 212.18%, which was a gain of 70.35% over this calendar year. So how many years did we win? We won from 2008 to 2009, 2009 to 2010, 2010 to 2011. We missed 2011 to 2012, but we made money again 2012 to 2013. So we won 4 out of the 5 years. That is going to be expressed as your annual win percentage. And so what we did was we took a 1-point pie and we divided it up into equal parts and assigned a weighting of 0.2 to each year. Another part of the equation was the overall gain. This is the last part of the equation, but again, in totality, when we run it all the way through July 31st of 2013, we have a gain of 214.25%. So let's get back into the efficiency formula. We've now solved for 2 parts. We've determined the annual win percentage. Remember, we won 4 out of 5 years. We already determined the overall gain at 214.25%. What's missing is the winning trade percentage. We grabbed that right from the backtester data. And I've taken screenshots to avoid any slip-ups and giving you any clues as to what we used to get these returns. But you can see we had a 54.27% winning percentage. Not too shabby. And our drawdown was only 19.19%. So the highest peak to the lowest valley in the equity curve was still less than a 20% drop. So let's plug all the numbers in. Here's how all the numbers fit into the formula. The 0.8 is not a 1.0 because we lost one of the 5 years. We then plugged in the winning trade percentage. Remember that was 54.27. We're then going to multiply it by the reciprocal of the drawdown. And we do that because the drawdown is really a negative feature to a portfolio performance. And we'll multiply that by the total gain. So when we begin to solve all the math, and we come up with an efficiency score of 75.16. So your submissions don't just need to beat our 214.25%. We want you to beat our efficiency score of 75.16 first. You must do that in order to qualify. Then the highest total gain will take home first prize. Second highest gain will take home second, and third highest gain will take home third prize. And $1,500 is at stake for first place, $1,000 for second, and $500 goes to the third place winner. Now there's just a few more rules to cover. All these challenge rules can be found in the VectorVest views for tonight's edition, but we'll cover them here as well. For account settings, we want you to choose an initial investment amount of $100,000. These will be the same settings we used, okay? And we want you to set your commissions to $9.95 per trade. Do not use margin, so uncheck that box. And you can also uncheck account for interest. And you're going to use next day's open for your buying and selling. As far as market timing goes, you may use any of the timing lists available to you. As far as automation rules go, we just have some minimum requirements here. You can use any search that you've created or that is already in the VectorVest platform, but they must have a minimum price criteria of $1 for long positions or $5 for short positions. If they don't already have that, yet you still like the search, you can change the dollar values on the particular strategies. Of course, that typically changes your performance. Okay? The average volume must also have a minimum of 50,000 shares. No custom watch lists may be used whatsoever. You can create your own as long as they abide by the restrictions above. As far as stop criteria is concerned, you may use any of the stop criteria available in Backtester. There's also a More Settings tab also in this section, and you must try to maintain a minimum of 5 positions. If you want to go upwards of 5 positions, that's fine. 10 positions, fine. It must be a minimum of 5. You must select Limit Repurchases and set it to Don't repurchase the same stock for 31 days. And also you must set the maximum percent of a stock's average volume to 2%. And again, this is all in the More Settings tab within the Automation Rules section, which is step 3 in the Backtester. Okay? Step 4, very simple. You're going to select the test bed or period of July 2nd, 2008 up to July 31st of 2011 and just give it a name and a description. Please make sure you indicate your username prior to the creative name for your backtest. And finally, all entries to the competition must be submitted to cachallenge@vectorvest.com by midnight, August 31st, 2013. And not a minute too late. Okay? You're limited to a single challenge entry in this case. And once all the submissions have been scored and verified, we'll announce the 3 winners. And so folks, the challenge starts now. Now it's up to you. What we want to know is who's going to rise up and succeed and take home all the bacon. The challenge starts now. Thanks for tuning in this week, and we'll see you next week with the Strategy of the Week presentation.